Is it going to be bullish for the price? Does it even matter? Does Bitcoin even need regulation? The new Fed chair that, he passed the Senate yesterday. Is that a good thing for Bitcoin? Is that a bad thing for Bitcoin? What's your take on the guy, or does it even matter? Are the best days behind us? Right now, where Bitcoin currently sits at $79,824, where do you believe we are in the cycle?
I think it'll take longer than the floodsters say it will, but it'll happen sooner than we think. It's just math.
Yeah, welcome to another episode of Simply Bitcoin IRL. I'm here with the man, the myth, the only Arthur Hayes. Arthur, thank you so much for joining us on the podcast. I think this is the first time you're joining us. I'm super stoked about it. How are you?
Excellent.
Good to hear. Good to hear. Hey, man, so many things have changed over the last couple of years. Our industry went from, being othered, being on the outskirts, to being like accepted in a way. Like, it was wild seeing the president of the United States posting from the White House account saying he wants to make America the Bitcoin capital of the world, right? You have Wall Street being interested in Bitcoin. You have these big banks, and that is a complete change from, back in the 2016, 2017 ICO era, where it was like basically the Wild West, which in my opinion was a little bit funner. It was a little bit wilder. What's your take on that, man? Because it is different. In a way, it feels like we're becoming suits.
I don't think so. I still think that at the end of the day, the reason why Bitcoin and crypto has value is it does something differentiated from the traditional financial system. Why would banks invest time and money onboarding clients to trade crypto if it did the same thing that every other financial product does, which is a liability of the banking system, and that comes with issues. So the value of Bitcoin is that it's outside of the system. Now, obviously, there's trading volume that's going on. Banks make business of allowing their clients to trade stuff. So as it got to a large enough asset class, with a $2 trillion, then of course they want to trade it. Of course they want to earn fees in this new asset class that's uncorrelated with everything else that they're selling to their clients. So I don't think this is any sort of philosophical alignment on what Bitcoin is, because at the end of the day, this is all about sound money, and banks are all about the exact opposite of that. This is about a bank is in the business of making money. Their clients want to trade this thing, and they're going to allow them to trade it in a way that they feel comfortable with, which is all these sort of derivatives and on-balance sheet crypto products. And so, yeah, I don't think Bitcoin is becoming suits. It's just that, okay, the suits feel like they can make some money, so they're coming to the conference. Great. I mean, it's an open source system. That's the whole point. Anyone can participate. Here are the set of rules, and if you want to join, come on board.
One of the narratives that I've been hearing on Bitcoin Twitter, I still call it Bitcoin Twitter because Bitcoin X sounds weird. But one of the narratives that I keep hearing, Arthur, is that the centralization of the custody of Bitcoin, right? You look at the largest ETFs, except I think Fidelity, they all custody their Bitcoin with Coinbase, including MicroStrategy as well, or Strategy as well, right? Does that concern you at all? Because I think this is the first cycle really that you've actually seen less people taking custody of their coins than in previous cycles.
It's definitely concerning. I hope that we don't, that Coinbase doesn't get hacked or have some sort of issue. And I hope that all these folks don't have to learn why we say not your keys, not your coins, though, in their own lives, because, it's not very nice to have your shit ganked. But at the end of the day, this is the point, right? It's not your keys, not your coins. If you don't control the private keys, then you are just, a schmuck that is hoping that Coinbase does, good on security. And I don't think they've been hacked to date, so the record is perfect. But there's no such thing as 100% safety in this world. So that is that risk. You have to balance that risk versus, okay, if you forget your password or you don't secure your coins, well, there's not like there's another option that's like completely risk-free. It's just you're responsible for that. So people have to make those decisions and sort of use a product that makes sense for them.
Yeah, absolutely. So, Arthur, another thing that happened that I think was enormous, and we were getting so much heat on this, particularly on Simply Bitcoin, when I was like, guys, listen, it's probably a good idea to elect Trump into office, right? We were living through Operation Choke Point 2.0. Our industry was being attacked in 1,000 different ways. You yourself, right, were kind of, lived through some of that, right? The mining industry, every part of the industry was getting attacked by, the previous administration. And I said on the show, I said, listen, guys, it's probably a good idea that, Trump gets elected into office. What is the significance of that sea change? And then my following question will be regarding the Clarity Act.
So I think the first thing is if you look over the history of Bitcoin, this is the presentation that I gave last week in Miami. The person in charge doesn't really matter. And I'm talking about in the U.S. context. Obviously, the big world out there, and there's 7 billion, 8 billion people, so we're really only talking about 400 million. But at the end of the day, if you talk about in the United States, Bitcoin had the biggest price appreciation under a Democratic president, President Obama. Then there was Trump, then there was Biden, and there was the second coming of Trump. And obviously, Trump's second time around, the rhetoric changed in terms of the crypto rhetoric around, okay, enforcement agencies, acceptance, and all these sorts of things. But at the end of the day, like Bitcoin went from zero to something, big something, with no regulatory clarity, with no support. The only thing that Trump has actually done in terms of bills signed is, I think, the Genius Act, right? That was signed in July of 2025. So we've gotten to an all-time high, at least in the United States context, with absolutely no clarity, absolutely no regulation, absolutely no support. So that isn't the constraining factor in the price. And I think that the price performance of Trump post inauguration in the second term has proven that the price is down something like, I don't know, 20%. So in my mind, this proves that Bitcoin's value has nothing to do with regulations or the lack thereof or crypto regulation. It has everything to do with how much fiat liquidity is there in the system, and Bitcoin will respond to that. And so it doesn't matter. It's nice that Trump says nice things about crypto and he shows up to the events and obviously takes people's money for the campaign donations and the SEC and the CFTC have wound down certain enforcement actions against crypto people. Like, great. But again, at the end of the day, the price action says it doesn't matter either way. And to the point about the previous administration, if you go back before the FTX implosion in 2022, Gary Gensler was a much different person in terms of at least a rhetorical stance towards crypto. It was a lot more positive. Sam Bankman-Fried was about to get almost every single license on offer in the United States. It was only because he basically bribed all these politicians with hundreds of millions of dollars that turned out that he just stole that money from his customers that the Democratic Party had to completely switch their tack on crypto because they looked so compromised. And so all of a sudden it was, this is the most evil thing in the world. But, Elizabeth Warren and all these other motherfuckers took Sam's money and were perfectly willing to, expound on the benefits of crypto as long as they were getting campaign donations. And so I think this whole people need to remember actually what happened. It's not that the Democrats are against crypto; it's that they looked compromised because their poster child was a thief. We found he was found out to be a thief, and therefore, in order to save their political skin, they had to turn a different tack to become their party of anti-crypto. And so things can change, right? And so I think people need to understand that politics is fickle. The priorities of politicians change all the time. It's all about compromise and horse trading. And so there is no demonstrative this party is great for crypto and this party is bad for crypto. Things will change. And so I think people need to keep that in mind.
I think Arthur. This is it's. I talk to a lot of people. That's a very unique take and that perspective, and it's good to go back and look at the history, and that makes perfect sense, right? They didn't really pay attention to it before FTX. They're very, like you said, their poster child ended up being a thief, and then that kind of forced their hand. That's the first time hearing that perspective, so I really appreciate that. What is your take on the Clarity Act? Because it's all the buzz right now. That's what everybody's talking about. They released the pages apparently 2 days ago in the dead of night at midnight. Is it significant? Is it gonna be bullish for the price? Does it even matter? Does Bitcoin even need regulation? You were talking about that earlier. Bitcoin number went up regardless of the administration, regardless of the political party, regardless of the regulatory environment. Is it a big deal, the Clarity Act passing?
I think for the broader crypto ecosystem, the Clarity Act pass or doesn't pass has no effect on the price, no effect on the trajectory of Bitcoin. However, if you are a founder or builder inside the United States and you're product or service is predicated on access to that market, or you are a CEO of a centralized exchange like Jeremy Allaire or Brian Armstrong, this is a very important bill for you, right? Because this is going to define how you interact within the system against the banks and other institutions in the financial services sector, and what that means for crypto. Now, obviously, the mainstream media is very Western focused, U.S. focused, and so they're blaring out all this nonsense about the Clarity Act this and the Clarity Act that. But in general, no, it will have no effect on the price, whether it passes or it doesn't pass. But again, if that is your market, if the United States market is what you care about in terms of, crypto financial services, yes, it is very important. I have not read the bill. I will not read the bill. It has no effect on crypto. From my own perspective, if it does end up passing both the House and the Senate, I hope Trump vetoes it because it doesn't. It's not necessary. It's just adding more complexity, red tape, legal costs, all these sorts of things that have nothing to do with crypto. Has nothing to do with open source tech development. If anything, it's going to hamper open source tech development inside the United States. But again, it'll have no impact on the price either way.
Arthur, earlier you were talking about liquidity, and I have read some of your pieces, and you mentioned the the funniest one was the one with the picture with all the men, and then the girl, was supposed to be the Fed chair, Jerome Powell. Absolutely loved that picture. Was hilarious. Perhaps we'll pop it up on screen so you guys will know what I'm talking about.
Yeah.
But what's your take on the new Fed chair that he passed the Senate yesterday? He got nominated to be part of the board. I think today is the vote where he gets voted in to be chairman. Is that a good thing for Bitcoin? Is that a bad thing for Bitcoin? What's your take on the guy, or does it even matter?
So I think people put too much emphasis on the Fed chair and what they will or they won't do. At the end of the day, the Federal Reserve is a part of the American empire, and it will do what it has to do to make sure that the government is well funded. And you can read, if you really care about Fed history, there's a speech in 1979 by Arthur Burns, former Fed chairperson, and he basically laid out that you might have all these thoughts about what you think monetary policy should be as a Fed board member or chairperson. But at the end of the day, you are a servant of the American people. If the American people want to spend a bunch of money on whatever the fuck they want to spend a bunch of money on, enabled by their representatives in Congress and the Senate, then the Fed must step up, and has always stepped up to print the money. And that's what he is saying. And so I think the speech is called "The Anguish of Central Banking," something like that. And so I think this fixation on who the Fed chairman person is sort of a waste of time. Like, yes, Kevin Warsh came out and said he was hawkish, but if you read the actual papers that underpin what he means by hawkish, they're going to reduce their holdings of treasuries, but the banking system is going to increase by the same amount. So the net effect is zero. It's just passing the potato between two different hands. But if you want to talk about reducing inflation, reducing the amount of credit in the ecosystem, that is not what Kevin Warsh is going to do. And so I know that initially people were bearish on liquidity creation because they believe that Warsh is a hawk, but I don't think they actually interpreted what he's said correctly and have read the papers coming out of the Fed where other governors explain what they mean by reducing the balance sheet and how they want to do it. What no one is ever suggesting is that the Fed take their, call it $6 trillion portfolio of U.S. Treasuries and mortgage-backed securities and sell them at the market and immediately drop the size of the balance sheet. All these proposals are about slow and steady ways in which they can change the regulation so that the banks buy the thing that the Fed is selling. So the net effect on the liquidity situation is zero, but the Fed can stand up to the people and say, yes, we care about the inequality, we reduced our balance sheet. But the net effect is zero, and inflation will be what inflation is, and the Fed will have no effect on that. So I don't really care. It doesn't matter. Warsh is going to do what Trump wants them to do, which is more money creation, lower rates, and that's what's going to happen.
And what does that mean for Bitcoin?
Right, number go up. The Fed's balance sheet is increasing. I don't see that stopping. It started increasing December of last year when they stopped the quantitative tightening and started reserve management purchases. That's not going anywhere. And yes, again, all these people talk shit about the previous administration at the Fed, or in Buffalo Bill Benson's case, the previous Treasury Secretary. When they get in that seat and they see the numbers and the message from the boss hasn't changed, right? Free shit for my voters. Now the Democrats give out free shit to their people, and the Republicans give out free shit to their people. And guess what? Besson or Warsh, give it the program, print the fucking money. And I don't care that you came out and you like derided your predecessor. You're going to keep the same policies because the policies did what they're supposed to do, which is provide the credit for the politicians to spend.
Gotcha. Makes perfect sense. So Arthur, this last cycle, I would say was a little bit underwhelming from a number go up perspective, right? We didn't have the historic blow off top that usually Bitcoin always has. We kind of had this like muted top that we kind of topped on apathy. We really didn't have this explosive price movement. Are those eras gone now that Wall Street is involved?
I mean, what do you consider explosive price movement? Because if you think about the low is what, like 15 to 20,000 in FTX, high at 126. So that's a good 6x in 2 years. So what is explosive to you, right? I think that if you need to understand, like, what does that mean? That's something, oh, I didn't get the blow off top. Well, what's that number? What are we talking about here? And I think the failure to be able to define that tells me that you don't really understand financial markets in terms of what it means for your portfolio and what is the return you're trying to achieve over a particular time frame. And you're just going with vibes, and vibes usually means your portfolio value is going down.
Gotcha. So, Arthur, question for you. In particular, that because it was a fantastic return, right? Like 16,000 to 125,000, right? As you said, 6x. It's a fantastic return. I don't think you're going to get that anywhere. But from a moving forward perspective, like, are you bullish on Bitcoin? Like, what's your perspective on diminishing returns? Because the number is bigger, the market cap is bigger. Are the best days behind us?
Again, best days. I think people have this romantic vision that, oh, if I was in crypto in 2013 or 20 whatever year, 20 something teens, I would have made so much money because the price went up so quickly and yada yada yada, right? And then people forget that, like, when I started in crypto, Bitcoin went from 250 to like $60 in the span of a week or two, right? Or let's say that you bought at the Mt. Gox high at like 1300, it went down to $135 over the next year and a half, right? So there have been, yes, amazing price returns, but have been punctuated by massive volatility. So while the volatility of Bitcoin is will decline due to the law of large numbers, that also reduces the risk that it goes to zero, the Lindy effect, right? And so you can't say that you wish that it was like that in the past, but then would not have been able to suffer the volatility on the downside as well. And I think this is the problem with a lot of people who get into crypto is that, like, it took them 10 plus years of getting berated with, this guy got the Lambo after trading crypto for 2 weeks, or looking at the social media of this person go to the nightclub that they wanted to go to, or the fancy restaurant, or whatever it is that they thought that they need in their life. And they don't understand that, like, put your mentality and how you think about markets in that time span. Can you suffer a 50% drawdown in 24 hours? Because I've been trading crypto for a long time. That absolutely happened back in the day. But tell me recently when Bitcoin's gone down 50% on massive volumes in 24 hours. I guess maybe the COVID March 13th or whatever it was in 2020, but like since then, I haven't really seen that sort of volatility. So again, I think it's this rose-tinted glasses, this nostalgia for the past, and people don't actually understand how they would approach that situation if they were there, and therefore they have unrealistic expectations of crypto. And to meet their unrealistic expectations, they pile on leverage, they get wrecked, and then they say, "Oh, Bitcoin didn't perform," or "I should have been in the Nasdaq or gold." No, you just don't have the right expectations and the right dedication to the art of trading.
Yeah, and by the way, I completely agree with that. Right, so I've been in this industry for a decade, and the early days there was a lot more uncertainty. It wasn't like it is today in terms of, again, you have BlackRock involved, right? You have the U.S. government is saying bullish things about Bitcoin. Back then, it was literally the Wild West, and I gotta say though, Arthur, yes, we did have 50% corrections in a day, but I do miss those dopamine hits, man. That volatility was nice in a way. Yes, 50% was harsh, but at the same time, things happened in a shorter, condensed amount of time, is what I would say.
True, but I think a lot of people did not make it out of the other side, right? How many people do we know who round tripped some massive gains because that volatility works in both ways?
Very few. I would say the amount of people that got in class of 2013, class of 2015, class of 26, class of 2017. A lot of those, I know more of those people that sold than that actually held. So I think that says it all, I would say.
Yeah, exactly.
So, Arthur, you've said in the past that Bitcoin is the hardest money ever created. What does hard money actually do to a society that adopts it?
It makes things harder and easier at the same time, right? It forces honesty in the if I'm going to loan you Bitcoin, right, I'm going to have a very high confidence in whatever it is, the venture or something, because I can't just go and create more Bitcoin, or there's some centralized authority that can go and create more Bitcoin. So the type of economic activity that happens under hard, sound money must be very, very valuable to the community in which it's being created, as opposed to today, where it's really just a financialized economy. And if you are privileged enough to have direct access to the credit spigot, then you can do all sorts of nonsense. In terms of, I mean, look at the however many services, at least in the United States, are VC backed because they just raise a bunch of free money. You know, your Uber and Lyft was heavily subsidized. Your DoorDash was heavily subsidized. Your pet walking out was heavily subsidized. So the true cost of all these services is essentially just free money, and then you complain about all the inflation that pops up because obviously this free money has to find an outlet into a hard asset. It's going into real estate. It's going into stocks and other things. So I think it creates a more honest society. But at the end of the day, the types of services offered are completely different, and the price, in some respects, might be higher, but it's going to be a high quality product or service.
Yeah, I completely agree. Do you ever foresee that future? Because I think the dream, and perhaps it was a naive dream, of us Bitcoiners for many, many years now, is this idea of the separation of money and state and society as a whole moving to a hard money standard. Do you think that that is even feasible, or do you think we're going to have kind of like this hybrid system where, you know, the governments will maintain fiat and then Bitcoin will coexist? And can Bitcoin coexist with, you know, a fiat monetary standard next to it?
I mean, I don't think most people want financial freedom at the end of the day. If you think about the
I
political
agree with
rhetoric,
that.
depending on, it doesn't matter if you're, you know, Democratic or authoritarian or whatever. If you listen to Trump speak, listen to Xi speak, listen to European leaders speak, listen to African leaders speak, listen to Russian leaders speak, it's all about what am I going to do for you that's not going to cost you anything. And the reason why they're able to do that is because they have access to the printing press and fractional reserve banking, and the way the system is set up. And these are the very popular political messages. Nobody is out there saying, hey, somebody that you don't know spent all this money a decade ago, and now you got to pay for it. And we're not going to create any more money for you. So sorry, it's just going to be a little bit harder for you. That is not the political message anywhere around the world. And so that means that you don't want some money. Right? You know, the average person in the world does not want some money. They want to get the free thing, but their neighbor doesn't get it. Right? So I'm on Team Democrat, and I want my free shit to do my thing, but fuck you, Team Red Republican. You don't get free money for your thing. And then the roles reverse, and the red says, no, fuck you. I want my free money for my thing. No free money for your thing. And that's essentially the world politics, right? Politicians just juke and jive to say, oh, I'm going to give you more free money. So please elect me, or please support my authoritarian regime. Nobody says, hey, we've done too much. It wasn't really your fault. You weren't even born, but sorry, you got to suffer the consequences. That's just not a political message. And so I think Bitcoin will exist. There will be those who appreciate hard money, who appreciate being able to save and beat inflation. But from a human perspective, I don't think that humanity is going to move to hard money. But maybe AI agents will, and maybe, you know, the agentic economy and the currency that I think is yet to be created that will support AI agent commerce will be a form of hard money. And, you know, if we believe the AI cheerleaders, that economy is going to be so much bigger than what we consider this carbon-based human economy to be. And so I think if there is going to be hard money, it'll be enforced by AI agents, not by humans, because, you know, most humans don't want this.
I agree with you, by the way, and I think that was a very tough lesson for, I guess, for me to understand as a Bitcoiner. Is I think a lot of us, miscalculated or underestimated human nature, and the reality is that human nature is it's about convenience. People would rather have convenience versus freedom and sovereignty. And I think that's something that, was a tough lesson to take in. But I've come to that conclusion as well. I think it's going to be a minority of people that actually value sovereignty, actually value hard money. Now, one of the things that you said that really interested me is that regarding the AI economy, why do you think the AI economy is going to be attracted to something like Bitcoin, sound money versus, the human-led economy? What is it about AI that is going to value hard money?
Well, at the end of the day, AI or an AI agent doesn't have a lawyer. They don't want to interface with the human squishy feely semantic um, way that we do with things, right? They're a different type of organism at the end of the day, one that's based on silicon and computers and logic and all those sorts of things. And so, and this is my philosophical belief that they're going to value a different type of money that if computers can persist forever and the infrastructure is there, an AI agent can exist forever, right? In theory, right? Obviously, that's not going to happen in practice. And so, whatever form of value that they're going to trade amongst each other that represents sort of the compute power that they need to do tasks is going to have to withstand the test of time and not have to rely on subjective judgments from humans or another actor. It has to be based in math. It has to be provable that it is scarce or that the inflation rate is known, right? These are things that you can't do in human forms of money because they're all based on political consensus about what we decide to do, and that can change. And there's all these rules that have to be adjudicated between humans to determine what the value of this money is and what it can and what it can't do. That just is not, you can't really run an agentic economy that's on 24/7 with a currency like that. So maybe it's Bitcoin, maybe it's something else, but it certainly cannot be a fiat currency.
Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded, non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
Got it. Yeah, it makes sense. Are you bullish on, because there's a tremendous amount. I think I saw a clip of Larry Ellison talking about how, all his friends are literally putting their personal fortunes, behind these AI bets. Do you believe in a lot of their expectations for this AI future, or do you think it's a little bit bubbly?
I mean, I love slinging some AI stonks, right? I got a whole portfolio of shit that I did zero research on, but it's AI and supplies AI, and somebody said it in a podcast, AI, so I fucking bought it, right? Fuck it, it's fun. Um, like, are we gonna overdo this capital allocation? Absolutely, we're humans. There is a truth here, right? Machine intelligence is better at certain things than human intelligence. Faster, better, stronger, cheaper, what have you, right? That all makes sense. And so we're going to extrapolate a amazing future, bring it back to today's present, and invest based on that. And we're going to overdo it. Now, have we all overdone it yet? I don't know. Credit's still flowing. The banks are still lending. The two largest superpowers are still supporting AI as their national security and national economic, interests, U.S. and China. And so the party's going to continue until something, an outside force acts upon it. The inertia is to continue to spend money, to continue to forecast this amazing utopian future where the robot does everything and we just sit around and draw squiggly lines on canvas and drink mulled wine or whatever, right? So I think obviously that's not going to happen in the time frame that the market thinks it's going to happen, and that mismatch is going to cause this optimism to turn to questions. And once you start asking too many questions, and you're like, maybe I'm overpaying for this AI future, and that's when the thing crashes. Again, I don't think that's right now, but I do believe that we will overdo it because we've overdone every other technological advance. But at the end of the day, we've got railroads, we've got sort of the internet, we've got all these sort of massive capital buildouts that improved human civilization on a longer time frame, but people still lost a fuck ton of money on the boom and bust cycle.
Yeah, absolutely. The speaking of stonks, the SanDisk, 50x in a year, man. Holy!
I did not trade that one. That's fucking crazy.
50x like SanDisk. This has been around for like decades and decades. And it was my father-in-law. He just like, because I've been telling him, it's like, you got to buy Bitcoin, and he just sends me the thing, and I'm like, 5,000% in a year. What is going on? Like, that's crazy, and it's because of the AI stuff.
Yeah, I mean, it's I don't think we're not even anywhere close to the stopping, right? I think what Jensen is on the plane with Trump going to China.
Yeah,
You think they're not going to do a deal? Please, come on.
Oh man. So Arthur, you were talking about, approaching this from a trading perspective. Right now, where Bitcoin currently sits at $79,824, where do you believe we are in the cycle? Do you believe that the 4-year cycle is even a thing? Do you believe it's still intact? Is this a good opportunity to get into Bitcoin? What's your take on that?
So again, I move everything back to liquidity. I don't like to be prescriptive in terms of time frames. I say, let me analyze what is the liquidity situation. Now, obviously, from October of last year until the start of the U.S.-Iran war on February 28th, we had a situation where, in my opinion, not enough credit was being created because the market was afraid of AI knowledge worker replacement deflation. So you worked at Coinbase, and you're a bottom 10% knowledge worker, and all of a sudden the AI enabled team does better, and so you get fired. Like Ryan Armstrong did, right? 14% or whatever it was reduction in the Coinbase workforce because of AI rationalizations, right? And these workers made good money, right? $200,000, $300,000. Now you're making zero. You were a mediocre tech worker. Nobody's hiring mediocre tech workers. If there's a star, yeah, you can get a job. Cool. But like nobody's hiring mediocre tech workers at that salary when you've got, Claude that can do better than you. And that's the problem. And I think a lot of people who say, oh no, AI is going to be great for jobs, the net loss is going to be zero. It's actually going to be, we're going to create more jobs, maybe in 5, 10 years. But like today, the guy or the girl who just lost their multi-six-figure job is not getting another one next week. And they've still got to pay their credit card. They still have to service that mortgage. They aren't going to, Sweet Green to buy the $15 salad, right? They're going to Walmart now to shop. This is what's happening. And so I think, and this is an impact on the banking system because all these loans are assets on their balance sheet. And now you're having some very, what were considered the best jobs by people being replaced, at least at the lower end, by AI, and these folks can no longer service these debts. That's an issue. And that's why we had software ETFs like SaaS companies selling off. I think Bitcoin sort of was foretelling this feature of, hey, there's not enough credit being created. The central banks believe AI is a productivity miracle, and they're not pressing the burr button. So, we're going to decline too. But the Nasdaq was flat from October till Iran war started in February. But post the Iran war, now it's all about let's unleash credit to number one, AI, drones, anything AI, drone, military technology related. That's getting funded in every single country around the world, and it's going to get funded by printed money. And then it's, hey, I need to make redundant supply chains. How is it that the Persian Gulf has been the Persian Gulf for millions of years, and yet somehow we all of a sudden discovered that there's this choke point, and all these countries, oh, I'm the UAE, and I have all these trillions of dollars worth of oil that I export, and it only goes to that one place, and I kind of don't like that country and those leaders, but it's okay. I'm not going to build another pipeline for a few $1 billion. I'll just go sponsor Live Golf or some other fucking nonsense, or the fucking World Cup, instead of building a pipeline to get my shit to my customers outside of control of the Iranians, or if the U.S. wants to fuck my shit up, right? So all this stuff doesn't make any sense, and so these people are now going to be, okay, well, let me spend this money, let me sell these treasuries, sell these ETFs, build the pipeline, build the ships, build the refineries, stockpile of commodities, and again, all inflationary. If everyone is now doing all these things at the same time, it's very inflationary. Again, the credit will be provided to do this, and I think these things really were catalyzed by the Iran war and what people are learning in real time about their vulnerabilities and the things that they ignored because they believed that the Americans were going to save them. And so these two things combined, I think, have created the substrate for a massive amount of money printing. And that's why I believe, I've written that I think Bitcoin bottomed at 60,000. And the next stop is going through the all-time high at 125, 126,000.
Gotcha. But you don't assign any timeline or timetable or any type of
No, it'll happen. It'll happen when it happens.
Gotcha. Do you have any expectations for 2030?
Who knows, right? I think the next big date for at least credit creation, in my opinion, is U.S. presidential election. And it doesn't really matter who wins the election, but if we're talking about this AI credit bubble and the biggest proponents of that, the U.S. and China, a lot of people don't really like AI, and a lot of people are being hurt by all this inflation, right? Electricity prices are going up, gasoline prices are going up, and most Americans do not own a lot of stocks. And so, yeah, SanDisk up 5,000%.
I want to give a shout out to our partner, Ledn. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledn fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledn's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledn's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledn.
I'm sure if you polled most American towns and hey, do you own any SanDisk or enough to make it mean something to you, like what the fuck is SanDisk? They wouldn't even know what it is, right? I'm worried about working my 2 jobs and trying to feed my family, right? This is what the average American is talking about. And so if you're the opposition party, the Team Blue Democrats, and you say, okay, well, I need a new political message here to try to win, it's an anti-AI, or let's slow down AI because AI is using all this electricity. It's using all these resources to build this thing that makes Elon Musk richer, and nothing's being done for the average American here. It's just like everything else. The rich get richer, and you just get fucked and ignored. Whether or not that's true is not the point. There's a bit of truth in it, and I think that is going to be a very seductive political message. And when investors start to realize that, oh, okay, there are some politicians that are gaining popularity with this message, maybe they're going to win in 2028. It's pretty much a coin toss, right? Who wins any U.S. presidential election? Maybe I should start selling some of these investments because what happens if they get reelected and they actually do make good on some of these campaign promises? Maybe I get big taxes. Maybe the regulations on what AI can do get pulled back. Maybe that new data center that was underpinning my AI capex number does not get built anymore. All these questions, and questions are good for bubbles. And I think that's when we have a pullback in sort of the assumption of credit creation, which will affect AI and that'll affect crypto as well.
Gotcha. That makes perfect sense. And what I'm getting from this conversation, Arthur, is basically Bitcoin's price is just directly correlated to global liquidity. So it's basically when they print money, that's when number goes up. There's no other thing that drives number going up. Is that the base case?
Yes.
Just yes.
That's simple. I give every time I give a talk, I give a chart. I said, what's the value of Bitcoin? It's technology, and yes, the blockchain works, right? We can take that for granted, for at least for now. And it's liquidity. How much fiat is being created? It's fixed. There's only going to be 21 million Bitcoin, and so therefore, tell me how many units of fiat will be created, and I can give you a price approximation of Bitcoin. It's just math.
So it's infinity divided by 21 million, right?
Yeah.
It's just when they print, the number goes up. Love it.
Exactly.
Love it. Arthur, what's your take on another thing that's been heavily discussed on Bitcoin Twitter? I'm going to keep calling it Bitcoin Twitter, right? Give me hate in the comments, whatever. Another big point of discussion is the whole quantum, FUD. I call it the quantum FUD, right? Which, by the way, if you've been around for long enough, this has been around since like 2017, right? What's your take on the quantum stuff? Like, is it as big of a threat as people are making it out to be? Is it something that potentially could be a problem years down the line? Is this something that is going to be a problem a year from now? What's your take on the whole quantum debate and the quantum threat on Bitcoin?
I think it'll take longer than the Fudsters say it will, but it'll happen sooner than we think. Now, we know that it's a problem. Again, as you said, this comes up every few years. Some, research lab puts out a paper and they say quantum, we will be able to break SHA-256 in however many years it's going to be, and then people freak out and whatever. But, there are mitigation things you can do right now, right? Create a new public address, send your Bitcoin there, do not spend from that. And if you spend from that address, then create another address and move your Bitcoin, and you'll be fine, right? It's obviously when people talk about the vulnerable coins, it's Satoshi's coins, right? Because they've been sitting there for however many years on the old addresses, and those are the most vulnerable if you believe that this Q day is in the near future. Now, obviously, there are bit proposals to sort of move to some hash-based signatures, and we're gonna have to have a discussion about what we want to do with that as a community. But I'm not particularly worried about that again. And there are things that you can do right now today to sort of remove that as a consideration from something that you're afraid of. Is just create a new address, don't spend from it, move your Bitcoin there.
Gotcha. Yeah. So just don't reuse addresses. Simple as that.
Yeah. I mean, this is not anything people have been telling people that for forever, right? Hey, if you want to have proper Bitcoin OPSEC, it's okay. Every time you spend, create a new address and move your coins there, right? Again, not to say that everybody does it, but this isn't like it's new advice that people are giving right now.
So could you talk a little bit about that, perhaps to people that are just not well versed in it? Why is it that new addresses or addresses that haven't been used or haven't been spent from are less vulnerable to quantum computers than addresses that have been reused?
Yeah, so when you expose your public key and a transaction, so when you do a transaction, you expose your public key for, what is it, the 10 odd minutes that it takes to confirm a transaction, right? And so the worry is that someone with a sufficiently powerful quantum computer, I think can use Shor's algorithm and reverse engineer the elliptic function. It would basically say, I'm going to take this public key and derive your private key. And I'm going to do it before you could do anything within that sort of block window, and therefore steal your coins. That is the worry about quantum computers. And at least when you use sort of, I think this is the newest address, what, BEX32 or Taproot address, whatever it is, you sort of, if you use hash-based signatures, if you have not exposed your public key, then there's nothing to back out about what the corresponding private key is. And that's why people are saying, send to an address that is unused, and then when you use it, okay, great, use it, and then move your coins to a new public address. And you can create as many public addresses as you want. It doesn't cost you any funds other than the transaction fee to move your coins. So again, that's just good hygiene, but it's people who have very, very old addresses who are most at risk from sort of quantum stuff.
Got it. Arthur, I want to talk about the early days of your entrepreneurial journey in the industry. What was that like, man? What was it like building BitMEX? What were those early days like in the space? Because I have some memories. It literally was like the Wild West. But I want to get your perspective. Like, what were you living through? What are some crazy war stories that you can share with us?
Crazy war stories. I mean, I remember back in the day when everything happened on Whalepool and some of these like TeamSpeak channels, and like everybody would like tune in from around the world and start just talking shit all day on these like voice activated things. It was a lot of fun. And shit was fucking volatile, right? There'd be days when shit be down like 50, 60%, right? And this exchange got hacked, that exchange got hacked, this wallet had an issue, that wallet had an issue. And so there was a lot of risk involved at the time. But I think it was a lot of fun to build a company in the space, very, very difficult to get visibility, right? Because at the end of the day, there wasn't a large wallet of money that was spent on anything for that matter. And so if you had a company that had any sort of funding, it was like, oh my God, wow, you're rich, right? Everyone else is just like nickel and diming trying to just like figure out how they're going to make this particular business work and find some clients that they're going to pay real money for their service. And obviously, me and my partners, we ran an exchange, right? When we started building after MT Gox, so people are like super anti centralized exchange, and especially from a you know, capital raising formation perspective, no VC wanted to fund an exchange, let alone a derivatives one. What the fuck are you talking about? You want to leverage on Bitcoin? Are you crazy? This thing's went to like 75% in like 2 days. Like, what are you talking about, Arthur? I'm like, no, just everything is going to be a thing. But yeah, it was super fun. It was great to be able to, have a vision, execute on it. Definitely had a lot of struggle getting initial clients. Like at BitMEX, we pretty much had no trades for 11 months until
Wow.
we like figured out how to like make a product that people actually wanted to trade. Starting with the 100x leverage, changing our margin method, and then obviously in 2016 we came up with a perpetual swap. But yeah, it was tough days for a lot of exchanges, especially new ones, because there were literally just days, many days, just zero trades. And so you have to just keep going and believe that this ecosystem is going to grow large enough so that you and everybody else can start to make some money. But it was fun. The meetups are great. Go on a random Wednesday and like have a few beers and just like talk shop with everyone else who has the same issues as you. I'm like, oh, how am I going to get some clients? Like, yeah, I just want to talk about this Bitcoin thing to somebody who doesn't think I'm fucking nuts. Like, you want match internet money? What are you talking about? Right? So like, but it was great. And you formed a lot of great friendships and camaraderie all around the world. People would meet up in these things, and I think it was a great ethos around. Okay, let's just build something. If you're doing well, that's great because if you create some visibility for the ecosystem, that helps me and my business as well. So I think there's a lot less ash-hole-ish behavior because again, we were all in this sort of same shit show together.
Yeah, and how were like and it was like I remember it was crazy days, and I do agree with you. It was a tad more fun for sure. What was your background, and what initially led you to want to see an opportunity where you're like, okay, you know what, this is probably a good idea, and I didn't know that, by the way. 11 months without any single trade. I mean, that definitely, you definitely need some determination and self-belief in yourself for you to persevere, to say the least. And I think every entrepreneur, you have to go through that journey, and it's something that you have to live through. It's not something that you can be taught in a textbook or anything like that. So what is your background, Arthur, and what gave you that initial idea where you're like, okay, I think something like this could work?
Yes, I was a trader by background. I market made ETFs in Hong Kong and Singapore for Deutsche Bank and Citibank for the first 5 years of my career post university. And I think, what got me interested in Bitcoin initially was I was a gold bug. So I had my, one or two gold coins that I had. Like, oh my God, the Fed's going to print all this money and hyperinflation and yada, yada, yada. And, my understanding of sort of money markets and the plumbing was very, very sensationalist. And I didn't really understand what was going on. But I did have this view that the whole financial system is nonsense. It's complete fugazi, especially as somebody who worked in it and saw what happened after 2008 and which banks did well and which banks didn't do well, who lied, who told the truth, right? Who was rewarded, who wasn't rewarded. And it obviously did make sense from you go to business school and you went, okay, sound money and all these sorts of things, and this is how things are supposed to work. And none of that actually makes any sense after looking at 2008. So I had a distrust of the financial system as somebody working from the inside. And so when I lost my job and I was like, okay, I don't want to do this anymore. I want to do something else. I don't know what that is. I heard about this Bitcoin thing. Let me read the white paper. And I read the white paper and I'm like, oh my God, this is fucking amazing. And I love reading financial history and economic history. And you always, if you think about some of the biggest fortunes that have ever been made in the world, they're at turning points in sort of human civilization, whether that's from sort of like some sort of industrial technological perspective, or at least in a financial perspective. You talk about the Rothschilds and sort of the, early 19th century wars in Europe and their use of technology to outperform their rivals. Or you think about, JP Morgan, the original, and sort of the turn of the 20th century, and what he was able to do with his financial institution, or about how any of the masters of the universe that we all look up to today in terms of like the larger hedge fund traders, how they made their money in the option pits in the 70s and 80s in the United States and mostly Europe. And he's like, okay, I want to be in one of those periods because if I'm in one of those periods and I'm able to latch onto something, some trend or new technology or a new way of doing business, then I can outperform. What's that in 2013? And then I read the white paper like this could be that. I don't know if it could be that, but fuck it. I'm 27, 20, whatever, however old I was at the time. Who cares if I'm sleeping on my friend's couch for a few years? I can always get another fucking job at a bank. Let's just try this thing out. And I literally was like, when I learned about Bitcoin, I said, okay, I'm a trader. I looked at every single exchange that ever been created in crypto. I set up for an account with every single one of them. Derivatives, there's a proto options exchange, every single uh, centralized spot exchange I tried to sign up for that mattered. And I just started trading. And I stumbled upon this derivatives thing. And I'm like, okay, well, super small, super janky, but like, I know that in traditional finance, you make money in derivatives. You don't make money in spot. So this is what I want to do. And I believe wholeheartedly that there would be somebody who would succeed at derivatives. And if it might be me, it might not be me. So let me see how long I can hang on and see if we can make it. And and we hung on long enough to make it, thankfully.
I love hearing entrepreneurs' stories and successful entrepreneurs. And again, it's always you always hear that the early days are the darkest. And but it's fascinating to me how you were able to essentially, because it was not only just your background but the historical context as well, right? So you had the historical outlook, you had the background in trading, you put that together, and then at the point of your life that you were in, you're like, you know what, let's roll the dice, right? So you said you were 27. When did BitMEX really start taking off? How many years of pain and uncertainty did you have to endure?
I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money, it's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
I think we started paying ourselves a very small salary in 2016. So let's call it 2 years of grinding before the three of us paid ourselves like some de minimis amount of money from the business. But we became profitable in about 2 years. It took us about a year to build it, and then about a year of fuck all trading, and then late 2015 is when we started making money.
Gotcha, man. That fantastic entrepreneurship story. I always love to hear them. They're inspiring. So, Arthur, right now, where are you in your life? Like, what are you doing? What are you paying attention to? I've heard you on some other podcasts, and I'm a subscriber to your Substack, which, by the way, I highly recommend for anyone for some great reading. What are you doing these days? Like, is it kind of like semi-retired? I made it. I'm just gonna do what I want with my life. Like, what is Arthur Hayes doing on a day-to-day? You just mentioned Consensus, by the way. The Simply Bitcoin Studios in Miami. So I wish I knew. We would have got you inside the studio, which would have been great. But what is the day-to-day of Arthur Hayes looking like these days, since you've built this successful exchange and all of that good stuff?
At least for me, and everyone's different. Making money was never the point. It's what you can do with it. And I've always wanted to have control of my time. And I love athletics, so I work out 2 to 3 hours a day doing some sort of sporting activities, whether it's running, training. So I love playing tennis. Play tennis every day, and then I do training to support that. And my biggest passion is skiing. So I spend 2 to 4 months a year on the side of a mountain, hiking out in the cold, and 8 hours a day, just like putting one foot in the front of the other, going down mountains. And thankfully, I'm able to do that, and I don't really have to do much else in my life other than that. And I think that's sort of my north star of what I like to do. And then on the work side, it's Maelstrom, so my family office, and we do early stage crypto investing. We advise. We're starting our own private equity vehicle, and I do a bit of directional trading. And I try to like keep it super chill. Like I'm not trying to make a bunch more money. Like I've got enough. And I can work out. I want to be healthy. I've gotten into longevity as well, like owning clinics that push you the envelope on like what we're trying to do to live longer and live healthier. And yeah, I want to wake up in the morning, and if I want to go read a book and drink a cup of specialty coffee for 2 hours, then I'll do it. Or if I want to go for an hour-long run, then I'll do that. So I just want to have control of my time. And the number that's on the screen in terms of net worth is kind of irrelevant as long as I can do that.
Yeah, and I completely agree, by the way. Like the ultimately, money is a tool, and I think an unscheduled life is really a life of freedom, I would say. And yeah, because again, you kind of wake up in the morning and you get to determine what you do with your time, which I think is the most precious asset that any human being has. So Arthur, we are getting close to the top of the hour. And I want to end it with this for the Bitcoin listeners out there. Is Bitcoin still a good investment in your mind? Are you still bullish on the future of Bitcoin in terms of portfolio allocation, perhaps for the older people that perhaps are just starting to dip their toes into it? What would be your recommendations?
So I always say put an amount, if you're just starting out in this game, put an amount of Bitcoin that you are willing to lose. Like you should not go to bed looking at your phone and what the price is. Like you could be able to turn your phone off for however long, a week, a month, whatever, and you don't care what the price of Bitcoin is. That's the amount of Bitcoin you should start out owning. And you should use it, right? You buy a little bit of Bitcoin, like send it to a friend, use the blockchain, see if this makes sense to you. Because you may say, fuck this is so stupid. Why don't I just go down into the bank branch and like do things like I always did it? And that's fine. The whole point of crypto is it's not a coercive system, whereas traditional finance is a coercive system. If you do not use the currency of your particular government, they will kill you. You can't go and pay your taxes in yuan when you have the US dollar in America. They'll say, sorry, that's not how this works. So it's an open source ecosystem, so you can buy as much or as little as you want, and you either agree with it or you don't. No one's forcing you to use it, but again, only invest what you are willing to lose. And then if you believe in it, then you can obviously put more money into it and sort of get into that game. I think that's the best way and the healthiest way to get involved and have a good outlook on it.
But you're still bullish on it, for the record.
Oh, absolutely. I mean, I think that, as Ledn says, nothing stops this train. There will be more units of fiat created. Bitcoin is the most responsive asset of its size to that liquidity creation. And so if you believe that that is the state of the world and the future, then this is the asset to own. And it's extremely liquid, it's portable, no one can take it from you, all these sort of things that go along with it. Yes, SanDisk was up 5,000% this year. Bitcoin did not do that. But like, if your broker decides that, they want to lock down your account for whatever reason, you don't have that SanDisk anymore. You can't, that doesn't happen with Bitcoin. So again, there's pros and cons, good and bad, but that's why I'm bullish on Bitcoin.
The sovereignty aspect, it's so important. There's nothing like Bitcoin and self-custody. I think like once you wrap your head around that and you're used to dealing with the traditional banking system, sending wire transfers, it just clicks. It becomes incredibly obvious. Arthur, this was our first rip. It's been an honor, man. Is there anything in particular you want to plug? I already mentioned your Substack, of course. Go follow Arthur on X. But anything else in particular you want to plug?
No, I'm at Crypto Haze on Substack, at Crypto Haze on X, and yeah, we publish content periodically. Please come read our stuff.
Thank you, Arthur. Appreciate you joining me.
Thanks for having me.